Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. We were on location on a Friday as we're doing this program at the Junior High State Rodeo Finals. I tell you, you want to talk about some great kids and watching them compete in some very tough competitions. It was pretty cool to be a part of their entire event. We're going to talk today about what's going on with this market trade. Interesting, no surprise. I think this has been a thing we've continued to talk about over and over again, is what's happening with the weather. We're going to dive a little bit deeper into that. That, of course, affecting our planting progress. We'll talk about commodity inflation cycle, along with what we see with the guesstimates of yield numbers. We've got a lot to unpack in this week's episode, so stick around.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again as we dive into this market trade. Joining us today is Shawn Hackett. He is with Hackett Financial Advisors, and Jeff Peterson with Heartland Farm Partners. And gentlemen, as I like to do every week, I want to get your initial takeaway. Just give me a nugget or two as you look at the markets. And Jeff, since you're in my upper left screen, we'll start with you.
You bet. Well, it was an interesting day of trade. I mean, coming in this morning, we had corn higher, we had soybeans higher, we had wheat higher. And then as we've been doing here lately, the thing we ran into is that once the markets went in the morning pause, we came back out and we had a little bit of pressure come in on the corn side and also on the wheat side. But overall, I think going forward here, we still got enough items going on here in the U.S. with the slow planting and also across the world that I think we're going to have a boost as we get into next week, Susan.
All right, Shawn, for you, what was your kind of market nugget for the week?
Well, we've had a decent run up in grains. We've reached some overhead resistance levels. We know markets tend to get weaker from mid-May into early June because planting gets done, everything looks great. So I think a pause is in action. We're seeing that farmers are definitely selling, as they probably should, especially if they're behind. But as Jeff said, I think there's enough going on over in Russia, Ukraine, and also with this larger inflation cycle for commodities that I think that brief pause is what it's going to be, brief, before we can get another leg up and then see where we go with the U.S. growing season.
So I think we got to start with the fact that this wheat market for so long has been kind of the leader of this trade and pulled corn along. And now we know we've got the wheat quality tour that was taking place in Kansas and Oklahoma. We've got the Drought is how a Friday ended up trading. And what's your kind of takeaway? Jeff, maybe I'll start with you. Your takeaway of what you saw within this market.
Yeah, it's been interesting on the wheat side. I mean, it's been a great market to watch because if we think back, we step back far enough, we'd say, the funds were short that market. And then what we did is as we had problems, they just kind of continued to start developing. We had dryness in Kansas, and we started seeing the dryness show up in Russia. And at a critical time, there's more critical times, but it was at a critical time. Then we ended up having a freeze in Russia and really over a number of days. And now we're coming back to dryness again. And that spills over also over into Ukraine, as Shawn had mentioned. But then what ended up happening is the fund started buying back the position. Market gets up to that 100-day moving average. Then we see it make a surge from the 100 all the way up that 200-day moving average. Now we have fell back because we did run into some resistance. But as long as we see those drier conditions out there in Russia, and also as we see some dry conditions in that southwest part of Kansas, I still think that gives us and opens the door for us to see the higher market down the road yet.
What about for you, Shawn, as you look at the wheat market? And then I want to kind of dovetail that onto what you're seeing with the Russian drought situation.
Well, it's always hard to know, are we going to focus on U.S. wheat weather and fundamentals? Or are we going to focus on Russia, Ukraine? My feeling is where we are today, Russia controls the wheat price. Everyone trades a differential from that. They're the ones that have been holding the market back for 18 months. And so, the James Bond movie From Russia with Love is the way I'm looking at this now, is that, they were supposed to have a 95 million metric ton crop. It's now down to 88, if you believe some of the recent estimates. And if this dome of high pressure comes back late May and carries over into June, it'd be the first time we would see that happen since 2010-11. And I think if you look at the charts of what took place in wheat and corn and grains from that, and they were nowhere near as significant a player back then as they are today, I think you can see that we have the catalyst for some more significant, not only short covering by the funds, but potentially actually going net long, which is the next stage of a bull market. When you get going, they actually decide to go long the market to a record level. And obviously that's something to look out for.
Jeff, did you see any inklings that we're going to see a drop in the wheat coming out of Kansas as that tour took place?
What was interesting is that I guess talking to our customers we have in Kansas, that the wheat yield, the 46.4, which is higher than what we've seen. Last year is I think it was 30, and it was over the 5-year average, and that adds, when we bring that all together, that adds about 30 million bushels more production than what USDA is thinking right now. Now, as we talk to our customers though down there, Southwest Kansas, is extremely dry yet, but we know that the eastern part of the state has had some really good moisture. But overall, I think it's still going to have a hard time ended up getting that size of crop out of Kansas, Susan.
All right, Shawn, I want to talk about the commodity inflation cycle. You brought it up in our pre-report chatter. Let's start with you. What's your takeaway?
Gold, silver, Bitcoin. If you look at those monetary assets and even throw in copper, which is kind of a little bit of a monetary metal and an economic metal, they tend to be the first movers out of the gate when we start a new inflation cycle for commodities. And all of them are, breaking out to new highs almost simultaneously over the last couple of months. The last time we saw that, Susan, was in 2020. That, of course, was very prescient for what was going to take place in 2021 and 22. And that doesn't mean that every commodity goes up at the same time all the time. There's different cycles, there's different fundamentals, but it does mean that the environment, we're now going to have a tailwind for higher price trajectory than the headwinds we've been facing for the last 18 months. And on margin, that means farmers, are going to have a better shot of getting some greater pricing opportunities when fundamentals allow than when you are trying to fight the tide and fight the deflationary environment that we had been in this asset class for quite some time. So I view that very positively and encouragingly, especially with some of the fundamental pillars that appear to be on the horizon. I think there could be a lot of reason this tailwind, could become a tsunami for better pricing for grain markets.
So, Jeff, do you have any follow-up on that?
Well, I would agree. In regard to the nice part about having that as a tailwind, that definitely helps us. And if we could go ahead and have some spillover of that over into the crude oil market and get that market giving us a little bit of additional strength also in the outside markets, that'd be beneficial. But no, I'd agree that if you can get those moving the way Shawn thinks are going to, that definitely is a benefit to the other commodities.
All right, I want to talk to you too, Jeff, about the fact that this is probably one of the slower planting paces that we've had in a while. I don't think anybody's going to turn away the rain that we've had, but it's still a bit of a maybe frustration that the seed's not in the ground in some areas.
Yeah, it most definitely is. And a couple things. We're definitely behind the 5-year average, but something we have to remember about that 5-year average. Within that, it was 2019. Also within that was 2022. So we've had some very slow planning happen in that. So when you look at back of what is a more normal, we're even further behind. Now, I don't think that this is going to be like a 2019 or a 1993 where we're going to have a tremendous amount of prevent plant acres. We'll have prevent plant acres. They'll get the crop in, but here's the concern we always have got. As we look at the forecast going forward, there's rain, and there's enough rain in there. It's going to cause some problems. And what's going to happen is when guys do get a window, they're all going to try to mud it in. And then all of a sudden we end up having problems with roots. We ended up having problems with the emergence, and you ended up having stuff that's crusting over. So I think it down the road, and it's going to take a little time to see that. We're going to have to get into where we start hearing about the stand counts. We're going to have to get into where we're starting to look at the condition ratings. And we're already hearing reports coming out of the country where, they put the crop in, the corn in, and it just haven't quite got the stand counts that they'd like. But we'll hear a lot more of that going forward, Susan.
How much is the market going to play on this? The what ifs? We always talk about it being a weather-related market. Do we see more pressure this year?
So I'll jump on that. the interesting thing about this is that we're kind of walking the tightrope, because these rains that we do get, even though I look at it and say, you know what, we ultimately are getting this crop in slow, well, but we are picking up rain. So if we went and had ideal conditions, the thing we have to think about is that it's not that it's just a one-way path to go prices higher, because it's not. There's items that can take it higher, but we do have to physically make sure that we're still continuing to get, weather conditions like right now to slow up the planting. If all of a sudden we walked in Monday morning and it looked like we've got great conditions and a window opened up that we didn't think we had, well, we would see this market go lower. Now, that's not saying it's done going higher, because down the road we could end up having some problems coming out of the summer also. So,
Shawn, do you have any follow-up to that as you talk yield numbers?
Well, I mean, for me, 2019 was a great example of how, the USDA essentially ignored the whole thing, said it all got done, everything was fine, and prevent plant wasn't there. And, with the whole fiasco that took place that knocked the market down from 450 corn at that time when everyone thought it was worse. But my view is that, it's more of an acreage situation for me. We already know corn acres are going to be light. And on the margin, I think this is going to make them even a little lighter when we get to the end of June and we get the planting report coming out about what we actually likely planted. And, if we're talking maybe 88 or 89 million acres planted, taking 10% off, and you start running, I don't know, say 175 yields, kind of what we've been running for the last 3 or 4 years, and you run the demand numbers, our carryouts are going to shrink considerably. Doesn't mean we're going to run out. Doesn't mean it's like, 1 billion bushel carryout, but we're going to be pushing 1.5, 1.6 billion bushel carryout, which is enough corn, but it's not, 2.2, and it's not a $4 market. I just think that scenario is, I think, what the market is beginning to start thinking about and trading. And obviously, if we have some more sinister weather in July of 100-degree temperatures in Iowa or something like that, where we worry it could be below 170, now you're talking about going right back to 1 billion bushel carryouts and being where we were before. I mean, there is a scenario to that spot depending on how things play out. And I think the funds are beginning to recognize that, maybe this is not the right time to be putting all their chips on a lower market right now.
All right. Well, gentlemen, we have run out of time. I appreciate both of you taking the time to join me on a Friday afternoon.
You bet. Thanks a lot, Susan.
Thanks, Susan. Always a pleasure.
That has been this week's Nebraska Soybean Board Weekly Market Roundup. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Nebraska Soybean Board Weekly Market Roundup.